This trade worked because I waited and didn't take the first entry opportunity. My name is Vi. I document every trade I take and every backtest I run as I work towards consistent profitability using market structure, supply demand, and price action analysis. In this video, I'm breaking down this backtesting trade from my journal, reinforce something simple but important: waiting for the right confirmation before entering a trade. First, we'll look at the higher time frame, then review two entry signals on the lower time frame, and finally, we'll review the lesson that this trade reinforced about patience and confirmation. Let's jump into the chart. We are here on the 15th minute, and we have turned back the clock to just before New York session start. We can see that we have a swing high and a swing low and have broken structure to create a higher high. So that means we are bullish on the 15-minute order flow and therefore looking for longs. And so as we enter the day, we want to see is some type of area to target. We know that price will want to retrace down the leg and ultimately find some type of internal liquidity before making it move up and creating a new higher high, as you do in a bullish order flow. For me, this Asia session low, denoted by the red line, is a key area to target. Because when I run a Fibonacci retracement tool from my swing high to a swing low, we can see that this key session liquidity falls under the 50% level, putting us in the discount area of this bullish price line. You could target this London session low where you have an accumulation of price. However, it sits above the discount. And so price is less likely to react in this area versus here. And so that's why I want to be patient and wait for price to mitigate this level. Let's play price forward to see what happens. A little before 10:30, we get the mitigation we were looking for. This is our signal to drop to the 1 minute to see if we can find entry confirmation. Here on the 1 minute, we can see our move down a lot clearer and in more detail. This is where the nuance comes in for me. We see here two key levels that suppliers have created. The first is further up the leg, where you see buyers stepped in aggressively only for sellers to come back more aggressively and create displacement and a break of structure. Buyers try to come in again, and sellers step in, but it's with less authority. You don't see as many fair value gaps, and the candles are a lot shorter. This is the price that eventually leads to the mitigation. And so if I want to see buyers step in, they need to not only break this level, but close above this level here as well. That would tell me that they have enough conviction and momentum to turn the order flow back in alignment with the 15-minute order flow we had observed earlier. Let's play price forward to see what happens. Here we can see that price does close above our first line. However, the sellers that we assumed were stronger here do push price down again to the point where we actually liquidate the original low, which tells us that we need to start all over again and look for a new level to target. For the same reasons that we discussed before, to me, this collection of orders, which precedes a heavy downward movement with displacement, is the next level that buyers need to overtake. Let's play price forward to see what happens. The sellers here are strong as they push price past this low again, causing us to move our entry level further down to this point. Let's continue playing price forward to see what happens. It's at this point that we finally get our bullish breakout structure on the 1 minute. You can see here this aggressive candle that closes above our key level. Note that if we had taken the original entry, we would have been stopped out numerous times. And so waiting for buyers to show us that they are in control has paid off for now. At this point, we want to look for an entry position to see if we can get into a trade. Here on the 5 minute, this fair value gap was a perfect opportunity to jump in. We'll place our entry at the fair value gap, stops below low, and our take profit at the external high. Let's play price out to see what happens. At the end of New York session, we're in profit, so we'll want to move our stops to help protect our downside. We can see that there's a fair value gap here that hasn't been completely closed through. And so I want to be mindful of that and move my stops just under the red line that originally denoted the Asia session low we are targeting. I've placed my stops a little bit below this to reduce some risk and leave the trade on overnight. I want to protect my downside because I'm not going to be awake to watch this trade through Asia and London session. Let's see how the trade plays out overnight. And we see at the beginning of London session, aggressive buyers step in to take price to a take profit. We can note that price did come back to mitigate that fair value gap we were looking at and just missed our stop loss. before rallying back during Asia session and finally completing its journey during London. This trade did a great job of not only giving us a perfect, but more importantly, following the market structure principles we were anticipating. The lesson for this trade is simple. Not every signal on the lower time frame is worth taking. Sometimes the best trade is the one you have to wait for, because the stronger confirmation often comes when price breaks a meaningful level, not just an internal high that looks good enough. I'm not a guru. I'm just someone documenting my journey to consistent profitability. If you do this differently, then subscribe and let's sharpen our hinge together. If you'd like to see another trade breakdown just like this, then check out this video here and I'll see you there.